If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall McLeod. Let's go, baby.
All right. Happy Thanksgiving to everybody. I'm sure you're going to hear this after Thanksgiving because I'm recording it Thanksgiving Day. So I trust you had a good time with the family and friends over the holidays and you're getting back to work. So I'm currently, like I said, recording this Thanksgiving Day. I'm down in the basement in New Jersey, and my brother-in-law has all kinds of cool games and collectibles and all kinds of stuff that he's got. The Simpsons, and I'm sitting next to Mario Kart in a Simpsons video game, all kinds of cool stuff down here. So that is what you're looking at on the video if you're watching on the video. I have been going through and taking a look at, the housing market, the multifamily market, and really what's happening in both markets, right? So in the housing market, obviously we're all familiar with the struggles that buyers are having due to the higher interest rates and due to limited supply. Essentially, sellers don't want to sell, and if they sell, what are they going to buy? They're going to get a new rate. Nobody's going to refund. So we're all familiar with that. And so on the investment side, it's kind of the same. It's like, where are you finding investments? Where are you finding deals that make sense? And so, I've been struggling myself. I sold a property and I'm trying to 1031 into a new property, and it's been difficult to find a larger multifamily that is priced appropriately in order for us to cash flow the way we want it to cash flow. And that's just because sellers still have this expectation on pricing that they think their properties are worth what they were 2 years ago. And due to the debt, they simply are not. And now we've got the issue with a lot of apartments coming online, new construction. And so in Texas, we've seen occupancy rates drop. So we're below 90%, I think, for the first time in a long time in some of the major Texas markets like San Antonio, Austin. So I just saw a stat on that. And so, having that is the issue on a personal front. I'm sure you are seeing this same type of thing in your markets as well, just due to the prolonged higher interest rates and just the market cycle that we're in. And so what's still happening, I guess, there are still deals and dollars. I mean, those are the two things that drive deals. And I think Andy Ramirez and I talked about this last week. If you haven't heard episode 106, I bring on Andy Ramirez, introduce him. He and I are partnering to launch a crowdfund, which is already launched and it's up and ready to go. You can go to the show notes and click on the link and it'll find out more about it. But we were talking about deals and dollars, and like right now, just like anytime, you need deals. If you're an investor, you need deals, and then you need dollars. So whether your dollars or investors' dollars, in order for you to go and execute on investments. And so, being that it's very difficult to do, finding those deals, that's very difficult right now. Andy's an expert in that, and finding dollars, I'm very good at that as well. So we are partnering together. We've launched this crowdfund in order to execute his strategy and my strategy from 2009 of buying single family houses, renovating them, and then owner financing them. And so we are now taking on investors. We've done this for years ourselves, but now we're taking on investors so that we can offer an opportunity for you to join us on these deals because it's so difficult to find deals, right? And so we did a crowdfund very intentionally so that we could take as little as $10,000 from non-accredited investors and be able to talk about it just like this, because there's a lot of rules and regulations around how to raise capital. And so this is a very unique structure and we're very excited about it. So again, if you are looking for an investment, like I have been looking, the 1031 that I've got is just, you have to roll it into a bigger property and I've got to do something with it. So if you're looking for investments and it's difficult to find, like you can partner with us, come in, invest into the fund, the crowd fund with us, and then just get a straight preferred return on your money. So up to 10% paid out quarterly. So you invest $100,000, $150,000 is the minimum to get a 10% preferred return. You'd be getting 10% annually paid out quarterly, if that makes sense. So happy to chat about that. Go to the website in the show notes and, or you go to ridgelineig.com and then go to the offerings tab, and it's RAM Capital Fund 1 is the actual offering that we've got. I've got another multifamily fund in there, but we're working on mainly this RAM Cap fund right now because the multifamily deal is still in legal. We're just waiting for the legal to be worked out. So anyway, that is something that I've been wanting to talk about. Been working on for a while now. It's the first time I'm doing a crowdfund, so it was a bit of a task to get through all the legal side of that in order to make sure it was structured the way we want it to be structured and provide you with the best returns we could for the type of offering that it is. So definitely go check that out. Again, happy to answer any questions. Just go through there. So today, what I want to talk about, it is Thanksgiving, near the end of the year. The real estate market's still a challenge, right? We're still having on the brokerage side of the business, somewhat of a slowdown unless you have people who are ready to sell. I mean, if they're ready to sell, those houses are going to sell still relatively quickly because there's limited supply that's coming on the market. We have seen in San Antonio a slowdown and the pricing is correcting slightly. So I'm going to bring on some other top producers from their country and keep talking to them as we see this change and develop so that we can see how that's going. On the multifamily front, I just read something today that we're first time in Texas in a while dipping below the 90% occupancy rate for multifamily. So again, what's happening there? We've got a lot of new construction that has come online. It's saturating the market. And so the rents are going to be compressing. The rates are still high. So a lot of these guys who went out and did new construction, they're going vertical. They brought these things out of the ground, are going to have a hard time selling for their pro forma sale price. So that equity may be challenged and or they can't refinance, or they may have trouble refinancing unless they already established a construction to permanent type of financing loan when they went and developed these things. So those are two things that are kind of challenging on that front as well. The other thing I want to cover quickly is the latest on the Sitzer Burnett case. It's of particular interest because I just got notification from our local board, San Antonio Board of Realtors, that we have been named, or SABOR has been named in a lawsuit, not unlike the one that was just not settled, but that just had the $1.8 billion verdict that was handed down. And so I imagine that's happening all around the country. Once one goes through, every attorney in the country is probably looking for these types of cases. And they will be filing these lawsuits. If you haven't already heard about it or seen it from your board, it is most likely forthcoming. So keep an eye out for that. It is, you have the Sitzer Burnett, and then you also have the Mueller case, which is still out there. It has not even, it has not gone to trial as far as I'm aware. So on those two happy notes, let me leave you with this. Economist Lawrence Yun predicts that after 2 years, so after 2023, he predicts that home sales will have decreased by about 18% this year. That's on the heels of last year, it was 17% decrease. And bright note, next year looks like it's going to go up to 15%. Home sales will increase by 15% next year. So kind of back to 2021's, volumes. And that mortgage rates are going to hover in the 6 to 7% range. So hopefully we're going to have some stability on the mortgage front, and people will get back to, hey, this is business as usual, and transactions will start flowing again into the marketplace. So happy Thanksgiving. I'm going to sign off on that and go enjoy some turkey and some family time, and I will catch you guys on the next episode. Bye now.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.